Friends, hello, thank you so much for being here. If you are back with me, listen to me yap here about stocks. Thank you so much if you're not. I'm glad to have you here. Let's talk about stocks right now that are what's going on with them and what is probably going to be happening here in the rest of the week with the market. So news is just breaking here. People are pretty PO'd right now. The House has just passed this big Biden plan to fund more money to Ukraine, Israel, and I don't want to get in politics, but this situation is really starting to affect, it's going to bleed into the market. Obviously, the market today, getting into the stock market, it just was a sell-off day. And we knew this was coming because things have been going so fierce here with numbers moving up, quarterlies with a lot of stocks that are pushing some big quarterlies. And we're starting to see a trend back up in AI. You know, I think this is what it's going to be all year. It's just going to be back and forth with the AI stocks. You know, or your bread and butter big companies too, like Amazon and all that kind of stuff. Talking about what is going on here, I want to do a reaction video about some people that are talking about the market. There's this big thing going on right now where a lot of these analysts think that the market is going to crash anytime soon. And with that, we're not seeing a huge crash. Now, today we had a slight crash, a sell-off, but it really wasn't that bad, and the market kind of came back. Now, with this news of this huge bill being passed through the House, is now going to the Senate, and the Senate is going to be a little bit harder to get this to pass, obviously because of who controls it, and obviously I'm speaking a little bit in code here because this is still a sensitive subject to talk on the free market, if you know what I mean here. So this isn't Rumble. So let's listen to this big stock advisor guy right here out of Duke, and he's going to be talking about what he thinks is possibly going to happen here.
Yeah, so it is confusing, and it always looks good before the slow growth actually starts. And what happened in 2023 was fairly simple, that the economy was driven by the consumer. So there was pent-up savings from COVID, and there were very generous government programs that injected money into savings. Those savings have been drawn down. So we're at the point right now where many consumers are out of their savings. And you can tell looking at the data. Look at auto loans. Look at credit card loans. Like if you're paying 20% interest on that, your savings have run out. On the business side, investment was already negative year over year in 2023. So those are significant headwinds. We've got commercial real estate. We've got a massive drain of deposits from our banking system because our banks are paying almost no interest into money market funds. And what that means is less capital available for loans. And this will play out into a credit squeeze in 2024. So there's many headwinds here for 2024, but it doesn't feel like it right now. The first quarter, and especially, in my opinion, the second quarter are going to be key. But what is pivotal is what the Fed will actually do. And when you said drip, 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 I just see that they are mistaken in reading what the real inflation rate is. Inflation has been within their target for the last year, but they're not seeing it because of the very stale shelter data that is skewing our read of inflation.
So obviously inflation is a huge thing, and this is why I started the video was talking about this deal. This gets to a point, and there's really, when I'm talking about this, people want to turn this into politics real fast, and it is, I get it. But this is stuff that will affect people's money. It will affect people down the line because we're just printing money we don't have, and it hurts the dollar. I mean, this is something even Putin was saying in his interview with Tucker. I mean, it's obvious what's going on, whether you're Democrat or Republican. I mean, that's just the God honest truth. I mean, you can only print so much of American money before it's freaking worthless. I mean, and that's what we're seeing right now. So that's why so many people are against giving more money. And I'm not even trying to talk about what's right and what's good for people. Obviously, there's people that need help, but it comes to a point where if you can't help yourself, then you can't help other people. And this is stuff that could hurt us later on in the year here with our market. So, friends, I don't know what is going. I don't know. Is this market going to keep going up, or are we going to see something really bad happen here? Is this the match that's going to light the wick here, with just investors having enough, with something bad happening here if they pass this bill, if it passes in the Senate? I don't know. I don't think the Senate's going to pass it, to be honest. But talking about a few stocks here that I just want to talk about, people ask me about, that I've talked about, I've made videos on, but I just want to just say where I'm at with them, obviously. Palantir, obviously, yes, still, I love Palantir. There's nothing wrong with Palantir. Palantir is killing it. I haven't been really talking about Palantir because Palantir has been it's being talked about so much with every other YouTube person, which is fine, but it's obviously like the hottest stock right now. It is the hottest stock out there, and it'll probably be a $50 to $100 stock here if it keeps going the way it is by the end of the year, especially this time next year. I mean, that's just probably what's going to happen. They're killing it on quarterlies, deals. We're probably going to see some more big deals happen here. I don't know that this is the little brother to Nvidia. It's not there yet, but this is definitely like a cousin that could be moving in here soon to that kind of path. So yeah, Palantir, I think if you're buying Palantir at $30 to $40, I think it's still cheap compared to talking about 3 to 4 years now. I mean, that's how you should look at it. Fubo. This is something that I am plowing some money into right now. I think that this is a risky situation. Obviously, the situation that has uprooted itself with this company as of late is that, we've got the whole sports. This company in particularly is famous for their sports package. That's why people love it. It was the hottest one during the Super Bowl because it offers so many channels, a package deal, and it's affordable compared to so many other things. But obviously Fox, Disney, all that whole big circuit, they're coming out and they said, we're going to make an affordable plan that is like, pennies on the dollar compared to all these other companies, platforms, and they're going to do something. They haven't really said how they're going to do it, and a lot of us don't even think it's legal what they're going to do, and it's not going to happen because you can't just control the whole sport. You can't make a monopoly out of it. And Fubo has come out here as of late and said, we're not really worried about this. We're still going to compete, and we're still, enhancing our company. So they have quarterlies coming up here March 1st, I think it is, and we're expecting them to be good. Their last quarterly was really good, and their subscription package is highly increasing at a fast rate. So I think this is something everyone should look at right now. I'm not saying this is the next Netflix. That's not what I'm saying. But I'm saying a year or two down the road, this is something that you might regret. That's what I'm saying. So look at it. Everyone's been asking me about Rumble. I've made a lot of Rumble videos. Yes, I'm still in Rumble. I have not moved out of that position. I've got to be honest, if Rumble were to fall back down to a $5 to $4 mark, I would buy more. Because I'm going to hold Rumble the rest of the year. Rumble, obviously, I don't want to talk too much about it because I've already made standalone videos with it, but Rumble has done really well with quarterly subscription. They just had the big partnership with Barstool Sports. I think more is going to come out of that, be chipped away here with that. And this is a growing company. This is a growing platform. And I think, obviously, too, it's attached itself to the Trump media train. And whether you like it or not, when we see good news with Trump or, the other stocks that are attached to him right now, Rumble is in that conversation and it's doing well. So I am still highly bullish on Rumble here and what they're going to be doing. But this is a long play for me. This isn't like a in and out. I'm holding this for a long period. I would not buy over $15 if we do see a $15 price on this here soon. But right now, obviously, the market it's had water thrown on it and it's really cooled down. So we're in a reset. We're wondering how big of a reset right now. Next, let's talk about DWAC. Obviously, this is a stock that I have been talking about highly. I don't even know who else is talking about DWAC. I've been talking about this thing for almost 2 years now. Still today, with the market being in the gutter, DWAC held this $40 mark. Man, so proud of the stock. It didn't even touch 30 today. I don't think it didn't. It tried to, but it didn't. This is really, really interesting because yesterday I made a video about the stock, and I said, you know, we haven't even seen the stock go back to $30 since the beginning of January. And or the end of January. When was it? Let me look here. Yeah, the end of January. So it's held its $40 mark here pretty good. Now tomorrow could be a different story, but still, that's a long time that it's held so far. So, but I'm not worried about this stock. As long as this stock keeps doing what it's supposed to do with the deal with Truth Social, being attached to Trump, all that, I think this thing's going to continue to run on FOMO and just really get out of control here. And I expect this stock to continue to grow into stupid numbers just based off of hype. That's just the truth. And, you know, that's not me throwing shade at it or being mean. I'm very bullish on it. I'm just being honest with you 100%. All right, let's react to one more video here where we're talking about inflation, how it could possibly hurt the market this year. Let's watch this.
Joining us to discuss this morning, Northwestern Mutual Wealth Management CIO.
And the Dow fell today.
Brent, it's great to have you. We've seen a lot of folks peel off their recession calls for the year, but you're being a bit stubborn on this one. Talk
CPI.
about why.
So we did have a forecast that inflation would move lower in 2023, and so we were optimistic on inflation when others were pessimistic because we believed that was tied to COVID. Unfortunately, what you're seeing now is that inflation is tied to the business cycle. So think about wages being above 4%, well above 4%. Think about companies continuing to raise prices. I think you're seeing that today. You've seen all these different measures of CPI actually move higher. For example, in the Cleveland Fed, median CPI is running at a 6% 1-month annualized pace. Core sticky CPI running at 6%. And so to me, what's going to happen is the Fed's going to leave rates elevated. The longer they leave rates elevated, the more it works its way into the economy. And that will eventually cause the consumer and corporations to have some weakness, which will lead to that short, shallow recession that we believe is on the horizon.
Lael Brainerd from the National Economic Council just told us
say
don't
it's
pay
coming.
too much attention to one number. And the broader trend is that we're seeing good growth and inflation come down without disrupting the labor market.
I'm not for sure. I mean, if you look at different measures of CPI, so for example, I mentioned the Cleveland Fed median CPI, which they believe provides a better view of the underlying trend of inflation. It bottomed in July at around 2% on a 1-month annualized basis. It's pretty much gone up every month to now being over 6%. That is not an underlying trend of inflation that's crumbling. Core services, which is tied to wages, has actually been rising for some time. It's in the 6% on a 3- and 6-month annualized basis. And so, yes, goods inflation has come down, but other measures of inflation that are more tied to the
look where
business
it's at.
cycle
It's not
are
that
not.
far down.
And that's where the big issue is to me. I mean, wages running at 4.5 to 4.8% is not consistent with sustainable 2% inflation. It's more consistent with the end of a business cycle, which is where, unfortunately, I think we're at.
I love when the media tries, they still try to play this whole card, and it's all politics, man. It's all politics. It's so politics. And that's why stocks and politics go hand in hand. I tell you so much. This is what they do. You know, you've got the media going, you know, inflation's under control. Things are cheap. People are making more money than they've ever made. No, they're not. I mean, they're really not. Just because Chick-fil-A is paying these, you know, kids $18, $19 an hour, what are you paying for a sandwich? I mean, it's not really that much different compared to when people were making $15 for the standard, you know, hourly pay. And all this stuff adds up over time, and it affects the market, it affects people's retirement, it affects how companies generate money. It's just... And to be an investor right now, it's hard to trust companies that they're, you know, especially, you know, you got your bread and butter companies like Amazon or Walmart or something like that, where you can pretty much trust, you know, they're going to do well because they're just the mainstream of how people buy, you know, products right now. But when you're trying to really, you know, sacrifice your money into a new company in this day and time, especially with all these guys, these bank guys, these analyst guys that all they do is watch numbers all day and trends. And when they're saying, hey, we think something's on the horizon here, it makes you scared, man. It makes you real scared. That's why me personally, I'm like, I got to get in real cheap. You know, I want to get in real cheap with something so I can have some wiggle room. And, you know, Let me finish this out.
So, Brent, game it out. I mean, let's follow along this path. What cracks first? Do you start to see real distress again in banks or commercial real estate, or is it more about just employment starting to flirt with perhaps a negative number, or at least not filling the number of new entrants?
I think all the above. I mean, if you think about the last year and people are impatient with rates working their way into the system, I mean, the consumer has largely been insulated, at least the higher end consumer, from the rise in interest rates because 66% of debt, consumer debt is mortgage debt, and it's fixed. You're seeing it start to crack at the lower levels. You're seeing delinquencies increase. Corporate debt, corporations termed out their debt. That's now repricing. Commercial real estate is repricing. And so the longer that rates stay elevated, which I think is likely to be the case because inflation is not over yet, the more it works its way into the system, which I think causes layoffs to occur. And you have seen signs of weakness in the labor market. Just think about corporate revenues this quarter growing at about 3.8%, while wages are growing at 4.5%.
Yeah.
That math doesn't work forever. And so I think you're going to see layoffs, which to me is kind of the final peg before we get a recession. I think that's
that will destroy a market.
I mean, the optimist would say, well, we have the most dynamic companies in the world, and they're already taking a lot of steps to be efficient. But I guess your point is that will snowball to the point where it begins to impact household balance sheets.
Yes, and that's why it's more of a shallow recession, because this time you have been talking about a recession for some period of time, I mean, a couple of years, and you have seen kind of rolling recessions where companies have gone through and cut costs. But I think there's one final, kind of downward trend in the labor market because there are more companies that need to cut costs because CPI, the ability to raise prices is going to be coming down. Which to me, with wages too high, this is how every economic cycle ends. And unless we've gotten rid of the business cycle, recession timings are hard. What I'm pretty confident in saying is that we are late in economic cycle, and late in economic cycle, you just want to behave a bit better.
Yikes. And that's what they're all saying, man. It's just, they're all terrified right now. You should be. We don't know what's coming here. We just don't know what's coming. So friends, the stocks I talked about, those are stocks that I'm interested in. Stocks that that I buy kind of just on the regular, just put some money, that I treat like a retirement fund, or like Tesla. Another stock that I'm gonna that I have made a position in, but I'm gonna really increase my position this year because this stock is blowing up. This company is blowing up, and it's DraftKings. I made a video about DraftKings a year ago when it was like $20, $19, I don't remember. And I told people, like, hey, this stock, this company is out of control. It is out of control. Gambling is like it like 5 years ago, no one ever thought gambling was going to be like the new investment tool, like in your pocket. I mean, 8 years ago, 5 years ago, Robinhood was nothing like it was now. And we're seeing that with DraftKings. I mean, gambling is just like, it's there in your pocket. And DraftKings is the number one right now leader in that. So if you're not looking at DraftKings, you probably should be looking at DraftKings. They are killing it with numbers, balance sheets, spreading like wildfire. I'm sure if you watched the Super Bowl, that's all you heard was DraftKings. Friends, I'm going to shut up. Let me know what you think. Best of luck tomorrow. It's Wednesday. I don't know what's going to happen in this market tomorrow. Man, this news is not good. It might be another sell-off day tomorrow. Take care, everyone. Bye-bye.